Imagine this. You are checking your brokerage account before the market opens, maybe half awake and not even sure if you want coffee or something stronger, and suddenly, one tiny quantum computing stock is exploding upward by nearly 30%. No earnings, no press release, no contracts, nothing but a rumor drifting through Washington about strategic technology. And the moment a government official casually denies the rumor, later that same morning, the stock collapses like someone cut the power. Before we go deeper, if you are watching this through Shorts, you can tap the full version link below so you can hear the whole story without interruptions. And let me say this early because it matters for your portfolio. We include a fully updated trading strategy based on the latest conditions, so stay with me to the end. Most stocks in normal markets do not move like this. Under ordinary conditions, equities move on earnings, revenue, contracts, macro policy, or guidance. For a stock to swing 20 or 30% on unverified political speculation is extremely uncommon. When this pattern repeats over and over, it signals something deeper, a narrative so oversized that the stock becomes a measuring device for national anxiety and technological optimism rather than a reflection of revenue or profit. It is exactly the force surrounding Quantum Computing Inc., ticker QUBT. To understand why, we need to rebuild the company's history from the ground up because the anomalies in its past explain the extreme reactions in its present. QUBT did not begin as a tech company. It was founded in 2001 as Innovative Beverage Group Holdings, Inc. This is far outside the normal trajectory of deep tech firms. Typically, companies working with advanced physics and photonics emerge from academic labs, federal grants, or engineering incubators. They very rarely begin in the beverage business. That unusual origin hints that QUBT's evolution would lean heavily on strategic repositioning rather than on long scientific lineage. By the early 2020s, the company pivoted into quantum-inspired optimization software, which uses quantum-influenced algorithms on classical computers. This is a standard business model in the quantum ecosystem and does not require physical qubits or cryogenics. Investor expectations were stable and modest. Everything changed in 2022 when QUBT acquired QPhoton. That acquisition transformed the company's entire identity. QPhoton specialized in photonic-quantum technologies built on thin-film lithium niobate, a material that allows ultra-fast modulation of light with minimal energy loss. Photonic systems manipulate photons instead of electrons, which means they could operate at or near room temperature. Traditional superconducting qubits require cooling to nearly absolute zero, which demands huge infrastructure and cost. If quantum systems can be built without cryogenics, the advantages are massive. That is why this acquisition ignited a new storyline. QUBT announced electro-optic modulators, frequency converters, micro-ring resonators, and a family of photonic machines called Dirac-1, Dirac-2, and Dirac-3. Later, the company introduced the entropy quantum computer, promising access to quantum capability without circuit-level complexity. But while the announcements multiplied, revenue did not. The company generated about $400,000 per year while losing nearly 7,000 Zen dollars. This is unusual because hardware companies with minimal revenue normally show milestone validation or academic partnerships. Instead, QUBT's valuation drifted almost entirely into future potential. Then came the Tempe, Arizona photonic chip foundry announcement. In normal semiconductor industries, chip foundries require billions in capital, sophisticated equipment, and years of build-out. They are almost always built by global giants. For a small cap firm with under $1 million in revenue to commission a photonic foundry was extremely unusual, signaling either extraordinary ambition or possible overstatement. Shortly afterward, Iceberg Research published the Phantom Chip Foundry report, accusing QUBT of overstating the facility's readiness. Unlike typical short seller reports that focus on valuation concerns, this one questioned the physical capability of the foundry. That escalation was rare and directly challenged the core of QUBT's narrative. A class action lawsuit followed, covering disclosures from 2020 through early 2025. While lawsuits do not prove wrongdoing, they add uncertainty, and uncertainty magnifies volatility in deep tech. Then came the quantum boom of late 2024 and early 2025. IonQ acquired Oxford Ionics. Rigetti and D-Wave released strong updates. JP Morgan made major commitments to strategic technologies, including quantum. Media began referring to America's Quantum Four, grouping IonQ, Rigetti, D-Wave, and QUBT. This grouping was itself unusual because the other companies had meaningful revenue and validated hardware, while QUBT had revenue under $50,000. Narrative, not fundamentals, had pulled QUBT into the spotlight. Then a political spark ignited the entire sector. Reports suggested the Trump administration was evaluating equity stakes in strategic tech companies. The U.S. government rarely takes direct equity positions except during major crises like 2008. For the government to purchase equity in quantum companies would be unprecedented. That rumor alone sent quantum stocks soaring. When a Commerce Department official denied the rumor, the sector collapsed instantly. This revealed that QUBT's price movements were tied not to its operations, but to national security speculation. Then came another anomaly. QUBT raised more than thousands of dollars through two massive private placements in late 2025. Early-stage quantum hardware companies normally raise capital in smaller staged rounds matched to engineering progress. Raising over $1 billion quickly suggests either a very expensive roadmap or peak speculative demand for quantum exposure. Both explanations are significant. Then, in November 2025, QUBT surprised investors with earnings showing adjusted EPS slightly positive and revenue climbing to about $4,000 for the quarter. The stock jumped to around $12 in after hours, but the technical chart told a different story. QUBT remained below its 200-day moving average in the low teens and far below its 50-day average in the upper teens. RSI had risen from oversold but was not yet bullish. MAC began to turn positive but remained below zero. So the stock showed improvement, but the long-term downtrend was not yet reversed. Right now, QUBT stands between two futures. In one future, the Tempe foundry is validated, photonic-quantum systems outperform cryogenic systems, and QUBT secures recurring government or commercial contracts. Prices in the 20s become realistic. In the other future, dilution continues, technology slows, or legal risks expand. The stock could return to the single-digit range. For traders, the strategy is clear. Short term, watch the $9 to $10 support band. A rebound could target the 200-day moving average near $13. Reclaiming $13 would be the first real structural reversal. Medium term, the zone between $13 and $17 becomes critical. Sustaining levels in this zone requires demonstrated commercial traction. Long term, everything depends on whether room temperature photonic quantum architectures can outperform cryogenic systems in real deployments. If they can, early low revenue will not matter. If they cannot, the market will eventually reprice accordingly. Quantum Computing Inc. is more than a speculative stock. It is a lens into how markets behave when technology, national ambition, geopolitics, and investor psychology collide. It is a reminder that early innovation often moves through chaos before clarity appears. For those watching this in the full video, thank you for sticking with the analysis. And for those catching us through shorts, remember to tap the full version link if you want the uninterrupted deep dive. And before we wrap up, thank you to everyone who watches, subscribes, likes, comments, and shares these videos. Your support means everything, and we will keep delivering better content every time. This was ValueStir.